Good afternoon again, everyone, and welcome to today's webinar on the Maryland Innovation Tax Credit, or ITSE for short. My name is Brandon Kennedy, Cybersecurity Program Manager here at the Maryland Department of Commerce. We are thrilled to have you join us as we explore this incredible opportunity for both tech companies seeking investment and investors looking for support for Maryland's thriving innovation ecosystem. So just very briefly, the Maryland Department of Commerce is the state's primary economic development agency whose mission is to stimulate private investments and create goods and sustaining jobs in Maryland. One tool we utilize to accomplish these goals are financial assistance programs, such as tax credits. The ITSE tax credit in particular supports technology companies raising capital to advance their research and developments towards commercialization, and we want to help prepare you to take full advantage of it. So today, we're honored to be joined by our distinguished guest, Guy Filippelli, who's the managing partner at Squadra Ventures, who will share his perspectives as an investor. Guy has an extensive experience in investing in innovative companies, and we're excited to hear his insights on how the ITSE program can drive growth in Maryland's tech sector. We're also joined by our expert tax specialist from the Maryland Department of Commerce, who will walk us through details on how the ITSE program works and how you can apply, whether you're a tech company or an investor. We'll start first with our featured guests, and then we'll get into the details of the ITSE program to learn about the when, the whys, and the how to use the ITSE program, led by our Senior Director of Finances, Annie Fish. He will then pass the mic to our lovely tax credit program manager, Abigail McKnight, who will provide a high-level details of the program. Towards the end, we will have a Ask the Tax Guy Q&A to answer some of your questions fielded by Jason Sobel. So just a few housekeeping reminders for the webinar before we begin. The webinar will be recorded and the recording will be posted on our Commerce website later this week. So if you have any questions during this webinar, please type them into the Q&A box for us to answer as time allows. You can also upvote and respond to others' questions and comments. If you have any questions that are specific to your company's or your investors' individual situations, my recommendation will be to follow up with us for an individual response. We will be providing our contact information at the end of this webinar. And finally, I want to point out that this webinar that we're in, we'll be discussing the ITSE program at a high level. So just like any other finance program, there are a lot of fine details to be aware of in determining your eligibility and applying. So I encourage you to refer to our ITSE website shown here for the complete regulations to understand how they apply to your company, or reach out to us for any questions. So let's get started with this webinar and hear from Guy Filippelli, who has firsthand experience with our ITSE program. Guy, thank you for joining us.
Thank you for having me, Brendan. Really appreciate it.
Hey, anytime, anytime. I mean, this is a great opportunity, and again, we thank you for joining us. So I'm just going to get straight to the point, which everybody has questions about. So, as an experienced investor in the technology and cybersecurity sectors, what key factors do you consider when evaluating potential investments opportunities in early stage companies? So, for example, like how does the innovative tax credit ITSE influence your decision-making process?
Yes, thank you for the intro question. Thanks for everybody for being on the line. I'll start. I think I'll start with that question of what do we look for. I mean, as investors, for those of you who are out to raise money from folks like ourselves, let me take a step back and explain Squadra, just to understand who's speaking with you. We're an early stage venture capital fund. We have raised about $150 million of commitments. We've deployed a good chunk of that into about 15 companies in the last 5 years. A good chunk of that have been in Maryland, although a good chunk of that are also national. We invest in defense and cybersecurity. Those are our two thematic areas. And we like to write $1 to $4 million initial checks, although sometimes that's gone as low as $500,000. And it just depends on what stage of the company's existence we're at. You know, um, we might be writing $1 million into a company and at a very early stage for 15 or 20% of that company, or we might be writing $5 million into a company at a later stage for 5% of that company. You know, that just depends. Um, I think it's simply important to remember that we are trying to make a risk adjusted decision that we're going to be able to make our money back and pay a return to our investors who've given money to us. And so at the earliest stages of a company's existence, that might mean we know, well, it's actually a helpful vantage point maybe to consider that to drive the entire venture capital ecosystem in this country, what is the difference between somebody giving money to a venture capital fund like ours or somebody giving money to investing in the public markets? You know, so there's rich individuals out there. They're called limited partners. They could be individuals, they could be companies, they could be a foundation, and they've got, in some cases, millions to billions of dollars to put to play in the ecosystem. They come to people like us and they say, okay, I could either give it to you so you could invest in early stage companies, or I could give it to T. Rowe Price and put it, or Brown Advisory or Brown Capital, I could put it in the public markets. The difference with us is we give them the ability to beat the public markets, but we have no liquidity when an investor gives us money. We don't offer them any liquidity back. So you invest money in Squadra and I put it in a company like Secure or Shift5 or Instant Teams. I'm not giving you your money back until we sell that company, and that's it. You can't get it out. So in order to counter that liquidity trade-off, we have to out-return the public markets. If you look at the stock market over the last 10 years and you say, man, I could have gotten a 20% return in the stock market if I just put my money in mutual funds. Well, that means I needed to return you 30% of your money during that time. If I don't do that, as a retail investor, you're better off just putting it somewhere where maybe you get a little bit less return, tiny bit, but you actually get liquidity from it. So why is all that relevant to this discussion? We look at every investment and we basically, at the end of the day, are saying, can we do that every time we write a check? If we think something's going to take 10 years, then we got to get 10 times back our money. And if we think it might only be a couple of years, those numbers change. But that we're modeling the rate of return and we're modeling the risk on the investment. And we do that for every single company we invest in. We write investment memos and we model out the return profile. This is why, though, these incentive programs are really intriguing. The way this IITC works, and we did it with one of our companies 2 years ago, you get, as an investor, you apply for the tax credit, okay? And you say, I am considering investing in this, what's called a QMTC, a Qualified Maryland Technology Company. And I know you're going to talk about this more later, which is basically just to say this is a fundable, commercial Maryland-based company. And you get essentially a refundable tax credit. I just think of it as a check for up to 33% of what you just put in next time you file your taxes back. So I'm going to invest, let's say, $750,000 into a company, and I can get $250,000 back. That means my 750 is really only 500. At that point, if the 750 doubles to 1.5 million. I mean, this is mathematicians are going to critique this analysis a little bit, but if you just understand it conceptually, now I've got $750,000 in my account, and it only cost me $500,000 to do that. If that triples, I mean, if that goes from 750 to 1.5 million on the company's cap table, the company sells for 2 times the valuation. I get 3 times the return. My 500 turned into 1.5. Those kind of positive economic distortions on the investment calculus, can sometimes really fundamentally alter an investment decision. And that might encourage me to invest in a company where I thought, you know what, I really like this company. I really like this team. It's just the economics of the investment are not yet quite compelling. It may be enough to tip us over. And it certainly has. And that's what makes it exciting. And when I'm now looking at the option as an investor, maybe I've modeled 2 investments almost the same, but maybe one's based in Maryland and maybe one's based in Ohio. And I have the tax credit on the Maryland company and I don't on the Ohio company. Guess what? I just altered my decision of where to put that money, and I'm going to put that money into the Maryland company instead of the Ohio company. Okay. And that works. Now, here's where it doesn't work, just to be clear. I like to always tell people investors don't make bad investment decisions because of tax credits, right? So what we're not going to do is say, you know what, we think this company is going to go to zero. Let's do this because we're going to get 33% of our money back on day one or on day, well, no, because guess what? 0 times anything is still 0. And so they have to be great companies. But hopefully that gives you a sense of the way we think. And I'll just add one last thing. I've actually been on the recipient side on both sides. Years ago, when I was the CEO of a company called Red Owl Analytics, we actually were a recipient of the tax credit when the tax credit was actually given to the company, not the investor. And it used to work like that a while ago before they changed it. And I actually used to say, like, well, that wasn't helpful really to anybody except me, but it wasn't helpful so I'm glad Maryland's made the move to change it and put it back to the investor, because now it encourages the flow of capital. So that's hopefully a little bit of a simple answer or to the question, and I'm happy to dive in anywhere else you'd like to go.
Yes, that was very, very well put. And just to let everybody know out there, that's actually the attendees, I do see your questions piling up. We will get to that. We're actually going to continue on with this with the Q&A with Guy. So again, my second question would be to follow up to your answer is from your perspective. How have the programs like the ITSE program or actually shaped the landscape of investments in Maryland? So can you share some type of specific examples of how these tax credits have helped catalyze the growth of innovation in companies that you invested in?
I think we're too early to tell, unfortunately, and I don't think we've achieved. We're operating on 10-year timelines, and we did this one investment 2 years ago. So this is part of kind of the legislative challenge here, because we're sitting out there trying to convince the legislature to put more money in these programs, and there's simply not going to be too much of a proof point in a very short amount of time. So the short answer to this question is not yet. And it's, for me at least, so I can't speak for other people, I speak for me. For me at least, it's like, hey, come back and see me in probably 3 or 4 years and we can start to talk about that.
Okay, sounds fair enough. So I want to pivot to the entrepreneur side of things of the conversation. So for tech entrepreneurs who are just starting to explore their funding options, what advice would you give them on how to position themselves to attract investors like yourself? How can they best leverage programs like the ITSE to make their companies more appealing?
Yeah, the most important advice that I could probably give anybody trying to raise money is to really understand that you've got to match your capital source with the the sort of trajectory or the style of what you're proposing. In other words, I just said we invest in Series Seed to Series A cyber and defense companies. It's easier to tell you what I can tell you a bunch of things not to do, and maybe I'll start there for a second. Don't come to me with a biotech company, and don't come to me with a real estate investment opportunity. Don't come to me with a consumer application that you want to build. And so who do you go to? Well, you find people that invest in um, what you're building and what stage you're at. Uh, you know, eh, the second piece of advice I would give is just remember when you're raising money, um, you're raising it. I like to say it's not about as soon as you start the pitch for somebody to give you money to build your company, just remember it's not about you, it's about them. And what I mean by that is as an investor, I'm taking your presentation and I'm going back to what we said at the very beginning. I'm trying to make a determination that of the 20 companies that came through to see us in the last week, we have to figure out what's the best one. And the best one for us is the one that gives us the highest likelihood to generate a significant, predictable, analytically sound return. Well, if you walk in and say to me, we're building the next Google. This is really, really big, but we never ever get to a fundamental discussion around what you think it's worth right now and what you think it will be worth in the next 2 to 3 years and why and how, then we probably have never gotten to the crux of what we needed to decide. So when you think about your investor pitch, think about prosecuting an argument of why if you give me, let's say I'm raising $2 million for a company. Why, if you give me $2 million, am I going to quadruple the value of this company on paper in the next 18 months? That's more important than you convincing me it's going to be $1 billion company. I want to understand the logic of how we're going to start with where we are. We're going to inject the inputs, which in this case is the money, which is going to turn into a set of outputs, which are things that you're going to use that money to do. And it's going to produce a set of outcomes. And I ought to be able to model what that's worth to you. And I ought to be able to model what it's worth to me. And so if I walk out of a pitch from a company and I go, wow, if I turn around to my team and I say, man, we're going to 5 times our money on this thing, and it's going to take us 24 months to do that, you're probably winning the argument. If I walk out of that pitch and I say, these guys are amazing, they're super smart, they're building something unbelievable, but I have no clue how the company is going to monetize, and I don't even know what it's worth right now, then you've gone nowhere. So I'll stop there.
Very, very well put. And again, I do see the questions piling up right now. So I'm just going to leave with this final question, and then we can go into the program overview. Given the rapid advancements in technology, particularly in cybersecurity, what emerging trends are you most excited about? And do you see a role in investments evolving around these areas over the next few years?
Look, for me, I think what's exciting in Maryland, in the area, for me personally, there are two things that are fundamentally exciting. One is the continued evolution of the cybersecurity landscape and the sort of advantages as a state that we have from uh, really world-class institutions, from NSA to University of Maryland College Park to Hop to the Hopkins and the Applied Physics Lab to, the entire, even just the intellectual capital that's in the DC metro area and in Baltimore in the Fort Meade corridor. So that's what's exciting to me on the cyber side. The other, so I think there's going to be a slew of companies that continue to get built out there. The other thing that's exciting for me is what we like to now, it's becoming a trendy term, defense technology. And what people forget about Maryland is we've got Fort Meade, we've got Aberdeen Proving Grounds, we've got Navy facilities in Eastern Maryland, and you've got something like, I think there's a stat that says like 40 or 50% of the Army's research budget flows through Aberdeen Proving Grounds. You all have a when we think about that as the state, there's one of my favorite, as much as I appreciate all of you, I think my favorite person in the Commerce Department for Maryland is Lisa Swoboda, who's just a complete and utter beast of knowledge on the Maryland military, whole ecosystem and the economic power that is. And so when you layer that on what is a very, very, even present day, you have what's happening in Ukraine and you have what's happening in Israel and Gaza, you have what's happening, what's on the cusp with Russia in general, with China, with North Korea, and you have a rapidly military that rapidly wants to evolve its technology set from hardware to software. So those are the areas that excite us, and those are the kind of companies that we're trying to invest in and build.
That is really, really, really well put, Guy. Thank you for these valuable insights. So now we will turn our attention to the specifics of the ITSE program. Andy, could you walk us through on how the program works and what companies and investors need to know to take full advantage of it?
And I'm going to peel off, Brandon, so thank you so much.
No, thank you, Guy.
Yes, Brandon, thank you. And thank you to Guy Filippelli for setting a terrific stage for the rest of the discussion this afternoon. This program has been around for a couple of years and a few iterations, and Jason has done a great job of preparing some slides to walk you through it. And you're going to hear things about the eligibility requirement, more about the purpose and the benefits, timelines, things around the application process. And when we get to the Q&A session, I want to mention that we truly want to be transparent and answer as many questions as we can. At the same time, there's just so much that depends on the individual facts and circumstances that are unique to each business and each situation. It's hard to get to all those in the true deep dive answer that they need. So we'll respond accordingly and do our best here. But then if we need to respond offline, we'll do that as well. As Brandon said, Commerce is part of the executive branch of the Maryland government, and we're led by Secretary Kevin Anderson. And the ITSE program, as you'll hear it referred to, is in place and designed to really enhance the ability of early stage Maryland technology companies in their efforts to attract private capital. And across our teammates, we put a lot of pride into helping businesses become engaged with the program, understand it, and utilize it best we can. And with that introduction, we'll turn things over to our teammates, Abigail McKnight and Jason Sobel.
Good afternoon, everybody. My name is Abigail McKnight. I'm the program manager here in Commerce and Finance. ITSE is a very important program. We want to encourage different types of technology sectors to apply for our tax credits. This is one of many of our tax credit programs. We have about 14. This particular program is mirrored on one of our popular tax credit programs that I see a number of you are asking about in the chat, is the biotechnology tax credit program. So ITSE We have different abbreviations and acronyms, and we're always here to help explain that to you. This is the Maryland Innovation Investment Tax Credit. It's been around, correct me if I'm wrong, Jason, for about 4 or 5 years. We started out with the cybersecurity tax credit program, and then we changed it. Well, I shouldn't say I changed it. And incorporated different technologies. I see a few of you in the chat are asking about the different types of sectors that we will look at, and we can talk about that later. It's a finance program designed to attract private investment in early stage tech companies in Maryland. It's primarily what we're looking at is early stage. As Guy had mentioned, it provides a refundable income tax credit. So it's like getting a check at the end of it. If you don't have any tax liability and you might be out of state investor, you can file a tax return with a copy of what we will provide to you when you go through the requirements and the application. You'll get a refundable tax credit. So next slide, please. Okay, so when you read through the statute and the regulations, we have a number of things that you need to qualify for. The first one is that your company, your technology company, known as a QMTC, is organized for profit, primarily engaged in research and development or commercialization of innovative and proprietary technology in an eligible technology sector. So you can always refer back to our website. It's the Commerce website, and we may have the link at the end of this presentation, but it's going to list all the technology sectors: cybersecurity, blue technology, advanced manufacturing. So you can see whether you fall into one of those. So once we go through the application, we'll be able to determine what you qualify for. Then the other oh, sorry, can you go back? Thank you. So, okay. Headquarters and base of operations in Maryland. We used to have a requirement where you had to have an office. We need to see a lease agreement or a rental agreement. But we've changed that a little bit. But you do need to have your base of operations in Maryland. A lot of people ask, can we be in a different state, etc. But we are going to be looking for that definition to be based in Maryland. You have to have full-time employees, 50 or less, has an aggregate capitalization of less than 100,000. So we'll be asking for your financial information and look at the balance sheet. We do get a lot of questions on that particular question. So if you want to ask us about anything, please do so. One of the requirements is that the company hasn't participated more than 3 years and own or have property licensed any proprietary technology. So that are the basic requirements for a QMTC. Then we have the investor. So you have to have a minimum investment of $25,000 in a qualified Maryland technology company. So that has to be anywhere except a tax haven country, and you're required to file an income tax return in any jurisdiction. Entity investors need certified articles of organization documents, management and ownership, and a certificate of status within the last 30 days. So we're going to be asking for your different types of organization details. This will all be asked for on an online portal. And then another one is the type of investment. I do see a lot of questions about this in the chat, which we'll get to at the end in the Q&A. So cash or cash equivalents contributed to a qualified Maryland technology company, exchange for stock, partnership, membership of other ownership interest, includes convertible debt. Next slide, please, Brandon. Okay, so these are some of the potential pitfalls that we've faced as Jason and I have been working on the program for a while. I just want to stress the importance that we do have strict timelines. It's mirrored on our BITSI program, Biotechnology Tax Program, and that used to be oversubscribed. So we try and stay in the timelines so we can help everybody, because it is a first come, first served tax credit. So these are the main pitfalls that we want you to be aware of. So when you make the investment, it cannot be made by or funded directly or indirectly by the qualified Maryland technology company. So you can't give the money to an individual that you may know to invest. No part of the investment funding can be returned to the investor after the investment. No part of the tax credit can be returned to the qualified Maryland technology company. Investors cannot directly or indirectly own more than 25% of the company after the ITSE, the investment tax credit investment. Founders and current employees, as well as certain relatives thereof, cannot participate in the company that has been in active business for more than 5 years. Entities owned directly or indirectly may be ineligible. Individual or entities are also ineligible. Investment cannot be made before Commerce issues initial certificate of approval to authorize. We have several steps that you have to go through. We have an initial certificate that reserves the funds. And this is based because our other program that it's mirrored on is usually oversubscribed. Not in recent years, but we used to have people that actually queued around our building, and we used to have paper applications. But now we're high tech and we have a portal and we make sure everything goes smoothly within the timelines. So we have different levels. So the initial certificate is the main certificate that you're going to receive before we go to the final certification. Next slide, please. Okay, we'll get to the good part, which is the investor benefits. So the minimum investment is 25,000. So depending on where you're located, you can look it up on the mapping tools that we have. It's called a GIS mapping tool. We have a 33% of a qualified investment. As you can see, and as we've said, you can get a refund for this if you have no tax liability in Maryland. Then we have something called enhanced incentives. So if your technology company is located in certain counties, such as Allegheny, Dorchester, Garrett, Somerset County, there's different percentages that you can get for an eligible investment. So if you're located there, great. And then they also have something called a RISE zone, which is another tax credit program that we administer here. A RISE zone is a geographical area that has strong nexus with a qualified institution, like a college or something, or a regional higher education center. And it's targeted for increased economic and community development. Right now, we have 4 RISE zones. So Jason and I can pull your address where you're located to see if you're actually located in a RISE zone. We can go into more of the requirements for the RISE zone later. And then we have an opportunity fund. This started on the federal level, and we have 149 opportunity zones throughout Maryland. And you can look at the maps again to see if you're in an opportunity zone, which, as you can see, you get an enhanced investment. They're actually on the right there on the mapping tool. They're in green, so they're dotted around Maryland. Next slide, please. Okay, so this gives you a flow chart of how it works. And anytime through the application process you have any questions, you can also let Jason know. People love working with Jason because he's able to answer all the questions. And, we all want to get you through this application. It might seem tedious at first, but once you go first through the first few times, you're going to be fine. Okay, so what we suggest is that you do a draft investment agreement. You work with the company and in your investment, and you come up with the terms, the preliminary terms. And then the company applies to Commerce for certification. I'll get involved with those dates later. Then we have an investor application. There's 3 investor applications that we call a Form A. So they're for the different corporate structures. Like if you're an individual, if you're a corporate entity or a pass-through entity, we have different forms that you need to fill out. And then the investment, the investor completes investment in the technology company and sends proof of investment to Commerce. And then the tax credit, investor files for the income tax credit with the Comptroller of Maryland. So that'll give you a nice little outline if you want to refer to this slide in the future. Next slide, please. Okay, so as we said, we're going to discuss, you're going to discuss the potential benefits of the program. Pick your technology company if you're an investor, and a 33% return of investment within a year. So you're just going to prepare the draft investment agreement, your convertible note, or your contract, and your pending terms. But the main point here, and this is something that we run into every single year, is the investment terms must be agreed to within 30 days after the initial certificate is issued. So make sure you keep that in mind. Next slide, please, Brandon. Okay, so QMTC certification, which is highlighted in red, begins on August the 20th. So we're actually going into fiscal year 2025 right now. So we're going to ask for some information, and it's going to be on our online portal that you upload documents. So you're going to provide us with a business plan. There is actually a copy of this particular Form B that's for the QMTC, and there's one on the website that you're going to be able to see a blank one, so you can look at the questions before you submit it. So we're going to ask for general information first, the name of your business, FEIN, that kind of thing. And then we're going to ask you, you got operated in are you located in an opportunity zone? Are you in a rise zone, which we just discussed on the prior slide? And then we're going to ask for a business plan. So we want to know details about your business, the operations of the company, how was it organized, how is it operated as a technology company, and what do you plan to do in the future, your research, your development, your commercialization. Then employment records, we're going to ask for that. As I said before, it's less than 50 people. And we also need dedicated people that actually work for your business. So we're going to be looking at that. And we also do verification on that too. Intellectual property list and documentation. We're going to ask for a capitalization table. We look at ownership pre and post. Then we're going to ask for financial statements, the balance sheet, the income statement. And then proposed investment. So we need to know the date, the amount, the agreement that you've come up with the QMTC, and the intended use. Do you have any current grants and awards? And then descriptions of company locations. So submit documents to Commerce Online with Form B. Form B is the QMTC Technology Companies application. Form A is going to be the investor application. So, review process. We do try and get it turned around quickly, depending on the information that you've sent through the portal. We're going to get back to you as soon as we can. We have to verify all the information. Jason is great at getting back to you as soon as possible and keeps the dialogue open. We do have timelines, but we will get back to you if we ever see a problem with anything. We're always here to help. May result in a rejection letter. We don't hope that this happens. Then this is different to the other program that this is actually mirrored on. Qualified Maryland Technology Company certification can come at any time in the process up to 4 months after investment is completed. When I said before that we're going into fiscal year 25, sometimes we're still working on fiscal year 24 because it is after the fiscal year end. We can go up to 4 months after. So depending on the timing of when you get certified, that 4 months kicks in. So we still could be looking at stuff after the fiscal year is closed. Next slide, please. Okay, so we have this registration queue, which I mentioned before. We have that versus queuing around the building and having paper applications. So you're going to register online, and you're going to receive a 5-character user ID and a 6-digit reference number. So I advise that you write this down somewhere. There's numerous times that people forget this. I know I would. So it's very important to have. And then use registration information to enter online electronic queue investor registration for a first come, first served. We want to be fair among all applicants. Next slide, please. Execute investment. So initial tax credit certificate, that's the main one that's going to reserve funds. Within 30 days, and that's an important amount of days to remember, investor completes the investment. Investor provides proof of investment within 10 days of making investment in Commerce web portal. So that's another important timeline. If the Qualified Maryland Technology Company status is granted, Commerce provides final certificate of approval, awarding the tax credit to the qualified investor. Next slide, please. So this is the best bit. You receive the credit, you file your return with the Maryland Comptroller. So you're going to include the final tax credit certificate that Commerce issues with your appropriate Maryland tax form. And then there's also this form called the 500 CR that you have to file to claim the credit on your tax return, because otherwise they won't accept it. So it's always best to consult somebody about your specific, if you're a pass-through entity, you're a corporate entity, you're an individual, they'll be able to assist you over there. Next slide. So I just wanted to briefly touch on the dates. As I said, we're now in fiscal year 2025. We have one form, which I've mentioned throughout the presentation, Form B. This is opening up on August the 20th, 2024. The Form B must be completed first before we can continue. Then we have Form A's, that's the investor application for individual, corporate, or pass-through entity. The investor applications are a little later. They open up on September the 3rd, 2024, and you can apply through September 24th to 2024. And then the registration for the online investor queue begins on 9/25, 2024. So they're just a couple of dates that I want you to be aware of, and it's on our website. And again, the reason we have to do this is because our other programs have been oversubscribed before. So we want to make sure that everybody gets, first come, first served. So this is the main simplified with everything goes good. And again, Jason and I are always here to help. You apply for QMTC status, you enter the queue, you make an investment when authorized by Commerce. We review the application as fast as we can. We look at all the information provided and we hope to approve the certificates and get them sent to you. And then it goes through the Comptroller of Maryland, who will process the tax return, and hopefully you'll get a refund. Next slide, please.
Yep.
Great success. So now we have some do's and don'ts. Let's try that. What are the do's and don'ts? Next slide, please. Okay. Do not accept an investment too soon. And we have seen this. So when to accept an investment depends on the investment vehicle. So I know there was some comments in the chat, some questions about SAFE. So this will hopefully answer it. So let me just, so for straight cash for stock transaction, the entire investment must occur within the 30-day, remember the 30-day period after authorized by Commerce. This means that the investment documentation is executed and cash is exchanged for stock within that 30-day period. No part of the process can occur prior to the 30-day period. As I've said before, it has happened and it causes a lot of problems. So please be aware of those time periods. Then we have convertible debts, notes, and SAFE agreements, future equity agreements. So they are usable in the following conditions. The investment is no older than 1 year at the time the investor applies to participate in the program. The instrument was issued to the investor in exchange for the investment funds. The investment is converted into stock and stock issued to the investor within a 30-day period. 30-day period. Just remember that. Next slide, please. While the company must apply for qualification as QMTC before the investor applies, QMTC qualification might or might not be issued prior to the investment. As I said before, the 4-month rule comes in. So we can still be trying to qualify your technology company while we're asking for investors to apply. So it's like a streamlined process. In order for the investor to receive the final tax credit, the company must qualify as a qualified Maryland technology company within 4 months after the investment is made. Next slide, please. Again, it must maintain its headquarters and base of operations in Maryland, a business facility located in the state where the company's financial, personnel, planning, management, administrative, technology research, technology development, and technology production activities are primarily handled. If you'd like to discuss any of those particular things with us, feel free to email Jason or I about what exactly we mean by that. We will ask for some information, but we'll help you work through that. Next slide, please. So how to claim the credit? As we just mentioned, It's pretty straightforward. You're going to file the return with the comptroller. And as you can see in that little box to the right, it lists all the different types of Maryland tax forms and also administrative relief. That's a good one for pass-through entities. The other ones are pretty straightforward, but any questions regarding tax filing needs to go through the comptroller because we're not able to give out tax information because that's driven by the comptroller's office. Next slide, please. Here we have contacts and references. So the ITSE webpage is going to guide you through everything that we've briefly discussed today. It'll give you the timelines too. Remember the 30 days, remember the 10 days, and then it'll give you the dates of when we're opening the program. Office of Cybersecurity, that's Brandon, who's presenting today. He's the program manager. And then my colleague, Jason Sobel, excellent resource to go to. He's your main contact on this program. And then you'll be working with the Comptroller of Maryland. We've listed Amy Poe. She's a really good tax specialist over there, manager, to talk about any tax issues you may have. Next slide, please.
I think that completes.
All right. So I assume we're going into the questions and answers, and I'm sure you have a lot of questions. So I'll turn it over to Jason, my colleague, who knows a lot about this program because he's been working on it for a while. So he's probably seen most of the questions you're going to ask today.
Definitely. Again, thank you, Abby, for that detailed explanation. And as you said, we'll now open the floor to the questions. Again, please feel free to type your questions into the chat, and we'll do our best to answer as many as we can with the time that we're permitted right now, because we're 10 minutes left. With 10 minutes left, and I definitely want to give you your time back. So, first question to be here: How do spouses and children over 18 account in the 25% cap on investor ownership? Do these roll up?
Hi, so we follow IRS attribution rules when it comes to determining how much money, or sorry, how much of a company an investor owns. So it's direct or indirect ownership that includes attribution from your spouse, from your children, from your parents and grandparents. And it also includes attribution from any stock you may own through entities. So if you own some stock directly and you own some stock through an LLC, all that ownership is attributed to you to determine whether you own 25% or more of the company.
Perfect. Now, this question is going to be coming from an investor standpoint. Now, as an investor, can I choose which companies to invest in? Also, I want to confirm, is the money I invest held for 10 years or can it be assessed earlier?
That's a great question. So you can choose to invest in any company you want that applies for the program and meets the qualifications. So Commerce doesn't connect you with tech companies to invest in, and it doesn't require you to invest in any particular company. The way this prototypically works is that you've already been having some conversations with a tech company, and they've decided to apply for the program to encourage you to make the investment because hopefully you're able to get the tax credit. As to the second part of the question, Guy was talking about a 10-year timeline for how long he thinks it'll take to be able to see the benefits of the program for a particular company. That is from his perspective as a high-end investor. For purposes of the ITSE program, you only have to keep your money in the company for 2 years after the investment is made. So after those 2 years are over, you can sell your stock in the company. The company, if unfortunately closes up, that can happen after 2 years without a tax consequence, or the company can be sold overall, which is where a lot of tech companies end up as they get bought out. And the recapture, which is the tax term, is a tiered one. So if, let's say you make the investment today in 2024, if you sell your stock in the company in 2024, you have to pay back the entire tax credit. If you make the sale the year after, you have to pay back a smaller amount. And if you make the sale in 2026, you pay back a smaller amount still. And then after that, in 2027, you're free and clear. There's no tax consequence to you divesting your ownership in the tech company.
Roger that. We have another one I did see here. That's pretty okay. Does prior participation in the BITC program preclude or limit a Maryland company's participation in the ITSE program?
Yes, it does. So the ITSE statute specifically says that a company that has qualified as a QMBC, which is the Maryland Biotechnology Company designation, is not eligible to qualify for the ITSE program. So you can jump from ITSE to BITSE as your company grows, but you can't go the other direction.
Roger that. And since we are actually on that subject, a caller or writer asks, is there a difference between between this program, the ITSE, and the BITSE program?
Yeah, well, there's a few differences. As Abby said, ITSE is mirrored on the BITSE program, but it's intended to be a more expansive program that touches on more tech sectors. And we had a question about that as well. There are 10 different tech sectors that are eligible to participate in the ITSE program, whereas BITSE is limited specifically to biotechnology companies, and there's a very detailed definition of biotechnology in those regulations. The list of tech sectors is subject to change, but as of right now, it includes advanced manufacturing, aerospace, agriculture, AI, blue technology, cybersecurity, education, energy and sustainability technology, financial tech, life sciences, quantum technology, and sensors and robotics. So first of all, that's a huge difference in what kind of company is eligible to participate. The second part of it is that the BITSE program has more strict requirements for the type of business facility that is eligible for the headquarters and base of operations in the state. The BITSE program requires that you have an actual owned or leased business facility, whereas given the tech sectors that are eligible to participate in this program, it may not make sense for a company to have a leased business facility if they're doing computer work for a cybersecurity company. So you're able to have your headquarters and base of operations be potentially a personal residence in the state of Maryland, which is a much easier requirement to meet for a lot of companies. Beyond that, the main differences between the programs are involving the amounts of money that you can get back. The BITSE program has a much larger statutory appropriation. So there's $12 million for the fiscal year 25 program and tax credit available to biotech companies through BITSE, whereas for ITSE, it's a $2 million appropriation this year. And whereas BITSE only has one tech sector, there are 10 tech sectors for ITSE, and the statute requires that no tech sector can receive more than 25% of that $2 million. So we could have 5 or 6 tech sectors participate in the program, and they'll be capped at being able to receive no more than $500,000 in tax credit cumulatively for all the investors in that sector.
Outstanding. We have time for 2 more questions. Assuming a complete loss on a QMTC qualified Maryland tech company investments after a 2+ year investment, is the full amount of the investment a capital loss, or is the capital loss limited to investment minus tax credit returned?
So that is, I think you're asking under federal IRS rules whether this is the extent to which the capital loss is claimable on your federal tax return, and Commerce can't give you tax advice on federal income tax rules. So sorry, but I can't really give any input on that.
All right. And so let's see here. I want to give something. Oh, are there any key dates that we could go over in terms of applications for the tech companies and also the investors?
Yeah, absolutely. So Abby touched on this earlier, but there are so many dates for the program. The first date you need to know is August 20th, which is a week from today, is when we will start accepting technology company applications. And your tech company has to submit its application before any investor can apply to invest in that company. There's a 2-week period where only tech companies are applying, and then on September 3rd, we'll start accepting investor applications. After that, Abby talked about our investor queue, which is the way we determine the first come, first serve order in which funding is made available to investors. When that opens, investors log on. It takes about 10 seconds. They input their credentials that they received when they submitted their application, click a couple buttons, and they get their queue placement. That queue will open up on September 25th at 9 a.m. Eastern time. And although in some years the program is underutilized, I always want to encourage you to get your application in before that date And make sure you register as early as possible, because it is possible that you could be the 5th or 6th person in line and too many people have applied to invest in your particular company, or too many have applied to invest in that tech sector. And you may not be able to benefit from the program while people after you in the queue can, because they're investing in a different company or a different tech sector. So you want to get in as early as possible. So I suggest you set an alarm for 8:55 a.m. on that morning, get in there right at 9 o'clock, do it. I promise you it takes 30 seconds to do that registration.
Outstanding. So that actually concludes our Q&A. And as we wrap up, I'd like to thank our guest speaker once again, Guy Filippelli from Squadra Ventures, Andy Fish, Abigail McKnight, and Jason Sobel from the Maryland Department of Commerce for their time and insights for today. I'd also like to thank all of you for joining us and participating in this most important conversation. So just as a reminder, applications for the ITSE program opens on August the 20th, 2024. So make sure that make sure you're ready for your application. 11:59 p.m. on the 19th for all qualified tech companies. So be sure to visit our website and to take advantage of this opportunity. We look forward to seeing the innovation that comes from the investments and the entrepreneurial efforts. Have a great day on purpose, everyone. Take care.